Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for a crazy, crazy trading day this Wednesday. And this was the 19th of May, I almost said the 21st, 19th of May, 2021. That was what I was getting to. We're about 6:45 at night. You're down another 100 points in the stock indices. You got a late day rally. They did make up a lot of ground. The NASDAQ even went positive, and now they're giving it back. The market's under weird pressure with analysts all talking, and I think it's more analyst talk. If you read the Fed notes today, yes, we know that some of the members want to start talking about tapering. Talking about it, doing it are not the same. What the market wants to hear is they're not even willing to discuss it. Okay, but they're discussing it at the European Central Bank. They're discussing it at the Bank of England. You don't want us to be behind the eight ball. There's nothing wrong with talking, but if they're truly data dependent, they need more data to make a decision. So now traders get nervous and they go, oh, the easy days of money coming off, and you go down in these markets. Today was a bloodbath for traders if they were watching it. Bitcoin, if you're a Bitcoin trader, you went down to $30,000 for a coin today, then back up to 40, finishing the day. Where are you right now? Around 37. So you've watched your value go down from 65,000 just a couple of weeks ago down to 30, lost more than half your money. I was watching the interview today with Kathy Wood. She's still talking $500,000 on Bitcoin. I heard the interview. She sold Apple and she's looking at other things for the next generation in tech. Okay, but meanwhile, what she did so well with last year, her fund's under. And here's the amazing thing, when people get into that, they'll stay with their guru. She was talking, and the question was, how much of an outflow have you had? So far, up until April, and April's not up until May, rather. May's only halfway. She hasn't had an outflow, she said. Amazing to me, as she's given back a chunk of cash. And it's not her, it's what they're invested in, giving it back. In the S&P, down 67 points for the week, down 1.63%. Okay, it's not a crash. The market last week was down, as you can see, 1.33%. So you're down 3% from your peak. Does that sound to you like the world's ending? Not to me. When you take a look at this chart, I have been adamant in saying that you peaked out here, you bottomed out there, and you're caught in between. And I've been saying it for days here, and that's all that you're doing. Is the trend down? Right now it is. You, in fact, had that trend go down here on Tuesday. Why? Lower highs with that lower low. So until you take out yesterday's high of 41.7950, the swing line is down. You got the break here, and then you got this. Where's the 18-day average in the others? You were under the 18-day average when that occurred, so swing line down, trend down, okay? Is the market going to make a run to the 39.46 level for the 100-day average? It could, but where's my friend, the Bollinger Band? And what do you think? I think the pros did today at 40.8350. They rang the bell. Why not? And the reason is you're not embedded. First of all, you're not oversold. You're not embedded. You have a trend that is down. The first challenge of it, I think the pros will sell the market short on rallies to the 41.56 zone. I think that over that 41.79.5, they'll raise their hands and call it a day, and they'll try to see what the market can do on the downside. The momentum of this market has changed to bearish. Understand it. In the NASDAQ, it is the same thing. You've got lower highs, lower lows. Unfortunately, it's oversold in these areas. Oversold doesn't mean it's going to go to the Bollinger Band. It might stall. Why? Part of oversold also means that you might not attract new shorting money in the market. When you're not oversold, it's easier to get new sellers to come into the marketplace. You have to define what oversold is, but there's relative strength, MACD, there's the slow stochastics, there's probably a dozen other indicators that people use. But at the end of the day, they work similar. Is the market staying in a trend? Is it getting overbought, oversold? Those will be the questions. The resistance, right now, the 100-day average, if you were to get over the rally back here, which is 13,448.50, that would negate this leg to the downside. Is it negated now? No, it is still fully live, but as I said, oversold. Here's a market that's fun. Tell me what you think will happen if the first time you hit a Bollinger Band, be it a top, which was hit right here, or a bottom. I think the probability is, if it's hit, the pros take money off the table. I'm assuming that when you're under the 18-day average, they're short. When you're over it, they're long. It's a big assumption, but there's so many different techniques to trade with via the algorithms, via other things that I can't go into it that way. But that doesn't mean that I'm not looking for that parameter, and I'm getting the exact bounce that I want. Take my enhanced Bollinger Band course. I just published it a week ago. Folks, I'm giving you the things I've learned over the past 3 to 5 years that I've never talked about, and they stare you in the face. It's amazing, and it's not just what I'm showing you here. Believe me, I'm not giving you the course here. I won't do it. You got to pay me for that course information. Lower highs, lower lows, flat here. By the way, $75 is the 13 chapters of the course. I think you can afford it. Take a look right through here. That's your resistance. So, are we in a downtrend in all these stock indices? For the moment, yeah. Is it a correction time? For the moment, yeah. Is it the sell may go away? Yeah. And I told you yesterday on your charts, use your software, write or circle the highs of May so that you don't forget it. That means that you could be under the influence of lower prices in the summer. They're already talking today. Once we saw the Fed notes at 1 o'clock, what's the Fed going to say come, I think it's June 10th is our next Fed meeting? What are they going to say? Are they going to say that they're ready to discuss it? I mean, to me, we had a hot CPI, we had terrible employment data. You need a set of new data to show the Fed what's going on. More hot CPI, that'll get their attention, unless that was just the transitory part. And you don't want to see worse jobs numbers. That would be a terrible thing. They have 2 mandates. Remember, they got to get them in sync. I don't know that they're doing anything right here. VIX cash. You came in, you had an uptrend right here. This high, 21.45. Actually, you had lower highs, higher low, and if you cleared 21.58 was when the market went into the uptrend. Not on a position trade. That would have happened this morning, and it went right to the Bollinger Band and sold off. So if the pros sold the calls, because that's what I see often in the VIX, the pros will write calls, write puts to get back to the closest moving average. The 100-day average is that. We'll see if it does it tomorrow. 30-year bond, too oversold, but in a downtrend. Now it's playing in this bottom quadrant of the 18 to the lower Bollinger Band. Still very bearish looking chart, but too oversold. I don't think you're attracting new short money in it. The 10-year note caught in the sideways bands here too, but you're just stuck at that 18-day average. You did have a big down day today. Watch this, outside day down. So there's the number you don't want to take out if you're trying to catch what it's going to trend with. I guess you're going to see selling, you would think, at 132.09. I don't. You're too oversold. I think a large amount of pros and moi will walk away from that type of trade. Dollar index went right to the lower Bollinger Band. So the market had been in a downtrend. I mean, I think you see that here. Lower highs, lower lows. If it's going to finish it off because it's already oversold, that's about all that I'm looking for. There'd be a window envelope in there possibly. Actually, the window envelope came out on this day. I can see it right now, what happened there. And it would have been what I call in my course a vertical price decline. And that means the next target's that lower band. It hit it, and getting a bounce from it's exactly what I teach you that I look for. Then we get to the euro, the flip-flop of the dollar. That's all it is. It's a mirror. Up, hits it 2 days, pulling back. Overbought. As the dollar's oversold, this is overbought. British pound, lost an embedded reading. I'm looking for further decline. Could go all the way back to 140.15, the 18-day average. We'll see what it wants to do. Bitcoin, whoa boy. Look at how this market has just come from up here, the $65,000 zone, to 30,200. It's staying under the lower band. It's overdone. I don't know where it'll bottom. It's not embedded. You're going to get a bounce out of there. I don't know where it's at, and I certainly am not advocating buying it when you get that type of pattern. As I said, the differential between Brent and WTI oil, I'm not using this. I'm showing it to you. I could just easily take it off, and that's because you're not doing anything with it. You're just hanging either side of it. But when I go to all the energies, it's pretty clear what they've done. For all purposes, from the upper Bollinger Band to the lower Bollinger Band, not in a trend anymore. Market is just hanging right here. Same thing happened in WTI. I mean, it's crystal clear. And if one were long, that's where they were coming out. If one were short, I don't see how, but if they were, that's where they're coming out. Gasoline, the market hanging at that 18-day average, momentum pointing down, no trend at all in any of these at this point in time. So when I look at them all, we'll see what they want to offer us. Tomorrow's, you're actually coming up to the last trading days in the June crude, so I'll be getting rid of all that. For those of you that follow my software and have it, there'll be a new version of this coming out on May 26th. So I've been on the pre-production version now for a month and a half, worked out what I see are all the bugs. We're ready to release, so I got word today that that's what's going to happen. It's all automated. If you have our charting software, when you go in, it'll say, click here to get the new download, and away you go. And there'll be neat new features in it, that I can tell you. So, you hear me really preaching to you about Bollinger Bands in my enhanced course. And the reason is I enjoy teaching, as you know, but I also enjoy really teaching. And I'm going to show you something in here that I learned over the past 3 to 5 years that I finally got down on paper and then put into this video series. I think it's one of the most important I've ever done. It's not expensive if you're a subscriber. It's $60 if you're already a paid subscriber to my research, $75 if you're not. Our What's Up meetings, we're just about finished. We think we're going to be able to roll out next week. They're preparing the emails and everything else that I need, so I'll let you know when they're coming. You'll get an email. You can just join in, ask your questions, and we're gone. They're only going to last about 15, 20 minutes, so you'll bring up a chart. I'll throw out what I know. I'm assuming you know what I'm talking about in terms of chart analysis. If not, it's a good time to not only take that course, but regular chart analysis. I'm Ira. You have a great night. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.